Broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, and welcome to this ESET webinar on the art of cyber. It's the art of cyber warfare is our series, and this particular episode is how cyber insurance fits into your cyber security posture. Hang on a minute. I can't advance the slides now. Apologies for that. My name is Tony Anscombe, Chief Security Evangelist at ESET. On our webinar today, I am joined by an external colleague, Nick Brayne, Senior Technical Advisor, Cyber and Technology for Sutton Winson, and Harrison Craigie, an ESET Pre-Sales Technical Engineer. And we're going to be hearing from both of those, and you have the ability to ask them some questions after the webinar. And I believe an on-demand version of this webinar will be made available to you afterwards as well if you want to replay it or share it with a colleague. For those of you that know me, I start all presentations I give with a reminder that cybercrime is actually a business. Now, this chart represents the cost of cybercrime to business as indicated by different organizations or different people over a period of time. 2018 was Dr. Michael McGuire, who gave a presentation at RSA in San Francisco. $6 trillion, the $6 trillion in 2020 was the World Economic Forum. Then we have Cyber Ventures and Statista. But the point of this slide is actually that cyber criminals are not the Hollywood people in hoodies, in dark garages, in damp basements. This is a business to them. They do make their living from it, and they have teams of people and employees within those businesses. So, we have to remember that they're well-resourced, they're unfortunately well-funded, and they have a lot of very interesting skill sets within their group. So we have to remember that, because we have to think of them as a business when actually they're coming to attack us in that way. Now, I want to share with you some statistics actually from the UK government, a survey that was conducted on data breaches. They asked companies whether they had seen within the last 12 months any type of security breach or attack. Now, 50% of businesses across the board, so that's small businesses all the way up to large businesses, said they had. Now, what's interesting is when you get to medium and larger businesses, that number is increased. So that obviously means smaller businesses either weren't aware of them being breached or attacked. And just to clarify, the security breach or attack is quite a loose term used in that survey as well, because it's anything from a phishing attack all the way through to a full-fledged security breach. So it's quite a wide range. Now, for charities, generally charities, 32% said they'd seen something, and when you get to the larger charities, that was 2/3. So you can see there's a bit of a pattern growing here. And like I say, the point of giving you this background is to make it's be understanding that cyber criminals are running a business, and unfortunately, it's a business that is attacking many of our legitimate businesses in normal day-to-day life. Now, if we look at the cost of a data breach, I always use the IBM data breach security report that's published once a year because it's fairly in-depth and well-renowned. And if we look at the cost of a data breach over time, now unfortunately it's in dollars, but I have converted it there for the UK into pounds. If we look at the growth, it's only going in one particular direction. Of course, 2020 was the year of COVID, so we saw somewhat of a small decline there, but it soon got back into going back up in the upward direction. Now, the UK currently stands number 7th in the world for the costliest cost of a data breach, the most expensive cost of a data breach. Number 1 place is the US, and in the US that's over $9 million. So nearly, pretty much double the average and near double the UK as well. Ransomware is a big issue, as we know, and Yeah, unfortunately, ransomware costs companies a huge amount of money, and I hope you haven't been a victim. I hope you don't become a victim. But yeah, I know Nick, I think, is going to share some stats on the cost of ransomware as well. So let's get with it and get to the subject of this webinar: cyber insurance, how it fits into your security posture. And I'm going to pass control across to Nick. Hopefully he will have more luck getting the slides to move in the first instance. There you go, Nick. It's all yours for a moment.
Lovely, thank you, Tony. Yes, my name is Nick. I'm Senior Technical Advisor for Cyber and Technology at Sutton Winston. Hopefully I can advance the slides, so that's working well. So yeah, today I'm just going to talk to you a bit around the coverage offered under a cyber policy and some of the key considerations for you, whether you're thinking of placing a cyber policy or whether you do currently place cyber, some things to consider about your current policies. I'm going to talk about how cyber insurance and cyber security are interlinked and how they work together, talk about some key security measures that you might need to have in place, or you might want to have in place before you place cyber insurance, and talk a little bit about the risk management offering that comes with a cyber policy. So first up, just to kind of continue what Tony was talking about with statistics, really, we've got that same statistic there that half of all businesses, according to Department for Science, Innovation and Technology in the UK, reported a cyber breach in the past 12 months. And I've also got some statistics here from Coalition, who are an insurer that we deal with in the UK, but they're a global insurer. They report in dollars, unfortunately, because being a global insurer, they place a lot of cyber insurance in the US as well. And we can see there, for their average claims costs ranged from $72,000 for their smallest businesses and up to $118,000 for their larger businesses. I say that's an average cost, so there will be some much larger than that. And what I think is really interesting is the claim severity increased 10% year on year. Now, that's not as much as we've seen in previous years. There was a big spike in claims costs a few years ago, but it's still tracking well above inflation. So the problem is getting worse faster than the economy is growing. Another interesting statistic from Coalition is that the average ransom demand that they saw in the last half of last year was $1.2 million. So if you look at those average claims costs compared to the average ransom demand, it's clear that either ransoms are being negotiated down significantly or that claims are being paid whilst avoiding actually paying a ransom. So let's talk about the elements of coverage under a cyber policy then. So in its most basic form, cyber insurance covers a range of risks arising out of your use of computer systems and out of your digital data. We tend to think of these risks as being from a malicious actor, so a hacker or a virus, or to do with data loss or a data breach. The policy acts as an emergency response service in the issued a cyber event that hack or virus occur. I'll come on to that more in a minute. And it's split into first-party sections, so cover for your own costs, and third-party cover for claims brought against you. To put that analogous to other insurance you might be familiar with, first-party cover is, for example, your office contents or your home contents insurance. If you lose something, then the insurance pays to reinstate and replace it. Third-party cover is like your public liability, your employer's liability insurance. If someone brings a claim against you for something you have done or you have failed to have done, that's a third-party cover. So I said that a cyber policy is an emergency service, and that's really one of the key things for a lot of people, their decision to buy a cyber policy. The question is, if you at 6 o'clock on a Saturday evening when you're working overtime, because not everything gets done in the working week, a message pops up and says you are locked out of your system, please pay X number of Bitcoin to release everything, who are you going to call? Probably not Ghostbusters, I suggest. Hopefully your insurer if you have cyber insurance, and that's, to say, a really key thing, because you've got this 24/7 emergency helpline to put in place someone to manage the whole process for you, a crisis consultant, to make sure to put everything else in place in a structured way. So that would be ransom negotiators if you need to negotiate with a ransomware criminal, IT forensics, find out what's gone wrong, how badly wrong it's gone and how you're going to fix it. Legal services, if there's a potential for claims to be brought against you, and public relations to minimise the damage to your brand as a result of that cyber event. So looking at the cover that's under the policy, we'll start with those first-party covers. So we've got these incident response costs, which I've already addressed as part of that emergency service, and that would also include notification costs. So, for example, notifying your customers if you feel you need to, or if you are legally required to notify customers of a data breach. You might have to notify the Information Commissioner's Office or another data protection authority around the world if you breach data. If you're a regulated business of some sort, you may also need to notify your regulator. So the cost of doing that and the process of doing that is covered. One of the really key areas, certainly the highest costs under cyber policies, is ransomware. So cyber policies will cover a range of things in relation to ransomware. First off, you have engaging a ransom negotiator, which is something that obviously most people won't have on retainer, to negotiate with the criminals. And whether or not you decide to pay a ransom, having that negotiation and that ongoing dialogue, just to slow things down, just to give you a bit of time to think, to see whether you can recover from backups or whether there's another way you can restore your systems, is really useful. The other good thing with a ransom negotiator is they will have intel on the main ransomware gangs, which you wouldn't otherwise necessarily have access to. So they will know, does a gang actually, is a gang's ransomware actually real? Can they give you a decryption code which will actually work? When you pay ransoms, do they do that? Or is there no point paying a ransom at all? They will also know a certain gang, for example, they might say, we know we can always negotiate to 10% of their initial demand. That's how they work. So they can give you realistic cost estimates at that stage. And then if you do decide to pay a ransom, and it would be the policyholder's choice to pay a ransom, never the insurer's, then the policy will also reimburse the cost of that ransom and help you set up Bitcoin wallets or whatever other cryptocurrency that you need, because ransomware is usually demanded in cryptocurrency. Moving on then, the next item of first-party cover is system restoration. So this is following your cyber event, your hack or your virus, is getting your system back up and running again, back to the amount of function it had before the attack occurred. In addition, alongside that, we've got the business interruption costs. So much like business interruption under a property policy, this covers your loss of income, but here it covers loss of income arising from the period whilst your systems are down from a cyber event. There's some more intricacies to it, which I'll come on to a bit later, but essentially business interruption is a loss of income arising from a cyber event. And then finally, under the first party covers, we have cyber crime. Now this is an extension of cover, so it's not included automatically on all cyber policies, and it is usually with a limit of maybe 100,000 or 250,000, regardless of the main cyber limit you buy. And this is cover for theft of money, essentially. So if someone hacks into your system and moves money out of your online banking, that's very clearly a cyber crime. If someone hacks into your system and modifies an invoice so that you end up paying funds away to a fraudster rather than to your legitimate supplier, that would be cybercrime. Some cybercrime policies will also cover things which are of more of a social engineering, so a deception fraud. So that might be someone hacks into your managing director's email account, sends an email from that account requesting money to be paid away, and you pay money to a fraudster. It might even be someone impersonates your managing director without hacking into the system. But at that point, we're getting really into pure social engineering fraud, which doesn't have a cybercrime element. And that's when you might need to start thinking about crime insurance, which I will touch on a bit later. Looking then at the third party covers, so remember these are covers that respond to claims brought against you by a third party. So the first one of these is data liability. So this is claims brought against you by a third party for breach of their confidential data. And usually when we talk about data, we talk about personal data because we've all been GDPR'd to death and we've talked about personal data a lot. But this could also be sensitive commercial data. If one of your clients is an F1 team and you make components for F1 cars, then a data breach of sensitive information relating to that car could be very costly, and you could see a commercial claim brought against you from that F1 team, for example. And really, anywhere you're signing a non-disclosure agreement, then there is a risk that if you leak data you shouldn't be leaking, that their claim would be brought against you. And as well as individual personal claims, those corporate claims would be a data liability claim. Next up, we've got network security liability. Now, network security liability is claims brought against you arising from your failure to secure your systems. Now, that's a little bit amorphous, so I'll give you some examples. If you receive a virus to your email account and that virus replicates on your system and then is sent out to your email address book, theoretically, your customers could bring a claim against you for sending them a virus because you failed to protect your systems and then you sent a virus onto them. Another possibility, and this is a real life example, if someone hacks into your system and uses that to backdoor into a system of a company you supply. So you may be aware of the hack on Target, the large US department store, a few years ago now. Massive hack, loads and loads of card details breached, very bad news for Target. But the way the hackers got into Target is they hacked their refrigeration supplier and then used the link between the refrigeration supplier's systems and Target systems to get into Target through a backdoor. I don't know if Target sued their refrigeration supplier for that, but I think reasonably they could have done, and that would be a network security liability claim. Next up, we've got media liability, and this is cover for your digital media. So predominantly websites, but also it could be blogs or social media or even emails, and particularly cover for breach of intellectual property rights, not usually patent, but generally copyright breach, and cover for defamation, so libel and slander. Now, unlike some of the other elements of cyber cover, there's not usually a requirement here for there to be a malicious actor. So it doesn't require someone to hack into your website and deface it and breach copyright or say something libelous. It's merely if that appears on your digital media and obviously you've not intended to breach copyright, then that would be picked up under a media liability section of the policy. And the last one we have here is payment card industry liability. So if you accept card payments, you'll know you have to sign up to the payment card industry data security standards, PCI DSS. And if you fail to comply with those standards, you could get investigated by the PCI, and you could be fined by the PCI. In that case, the policy would pick up the cost of dealing with the PCI investigation and also the cost of the fines themselves. It's worth saying at that point a note on fines. So some types of fines are uninsurable. Generally speaking, government fines particularly are designed to be a punishment. So if you can insure them away, then they stop being that punishment. PCI fines don't fall under that category. They are a contractual penalty that you sign up for. They are insurable and they are covered under cyber policies. So I just want to talk about some key considerations you might have when placing a cyber policy, or if you already place cyber, things to consider about your cyber policy. So first bit, we have bodily injury and property damage exclusions. Cyber policies are designed to cover digital assets. They're not designed to cover things in the real world, in the physical world, I should say. So if you have a manufacturing plant with connected machinery and someone hacks into your systems and a robotic arm swings around and hits someone on the head, that's not covered. It's bodily injury in the real world. That should be picked up by your employer's liability if it's an employee, or public liability if it's a member of the public. And you should have a look at those policies. If that is a risk for you, you should have a look at those policies to make sure they are covering that exposure. Similarly with property damage, if you have a furnace on your manufacturing site and someone hacks into that, disables the safety features, it catches fire, it burns down, the whole manufacturing plant burns down, that's not going to be picked up under a standard cyber policy because it's a property damage. Now, the tricky thing here is many property policies have cyber exclusions. So that cyber exclusion might say, we won't cover anything arising out of a cyber event, in which case you would have no cover whatsoever. Or your property policy might say, we won't cover anything arising out of a cyber event unless it arises from an otherwise insured peril. In that case, then your furnace still isn't covered because it was destroyed by the hack, essentially, but the fire created by that, which burnt down the rest of the factory, would be covered. So again, if you have connected machinery, it's really worth looking into this. There is also specialist cyber property damage cover, which we call CZ cover in the industry, which is a whole topic to itself. But just to say, that exists if it is a serious exposure for you and you can't cover it under your property policy. There is other cover out there. The next 4 points really about business interruptions. So business interruptions are a little bit complicated under cyber policies. So the first question is, what is the trigger for the business interruption? Is it interruption? Is it an outage of your systems or any degradation of your systems? So to give you an example, if you are an online retailer and your website is hit by a denial of service attack, which is when lots and lots of data bombards the website, lots and lots of requests for information, and it slows or stops your website. If that slows your website down to a crawl, that's not an outage because it's still running, albeit very slowly, but it would affect your trading if people go, well, actually, I don't want to wait for this website, I'll go elsewhere. Usually, business interruption cyber insurance now covers any degradation of systems, not just a total outage, but it is worth checking for because some old-fashioned policy wordings won't talk specifically about outage. The next up, the other end of the business interruption is the duration. When does it last until? So if your business interruption policy were to say you are covered until your system is restored, that might not be a lot of good, because if you take us for an example, Sutton Winston, we're an insurance broker. If we lost our systems for 2 or 3 days, we wouldn't lose a lot of income. A lot of our business is renewal business. We would be able to work around not having computer systems for a few days. But there might be a real reputational impact of our system outage, of our being hacked. And if there was a reputational damage and we lost clients, because clients renew annually and we earn income from them annually, it could take a full year for us to see all of the lost income from those clients we've lost. So cover just for the period of system outage wouldn't be terribly useful. Now, most cyber policies deal with this in one of 2 ways. Some cyber policies say, we will cover you until your business is trading in the way it would have been had the cyber event, the hacker virus, not occurred. And that's great. It's all 1 period. There'll be a maximum indemnity period on the policy, 3, 6, 12 months, for all the period you're losing money. The other way that cyber policies do it is they say, we'll give you 2 separate periods. We'll give you an outage period, and then we'll give you a separate reputational harm period. And that might run concurrently with or consecutive to the system, the outage period. That's just worth understanding, particularly if you are exposed to kind of those longer tail losses, because you might have different limits or different periods for system outage and reputational harm. And reputational harm could be as little as 3 months or as many as 36 months, depending on the insurer and depending on what you need. The next point, and still really on business interruption, is outsource systems. I imagine most people on the call will outsource some of their IT, whether that's you store your data in the cloud with a cloud service provider, whether you use software as a service, or you're logging onto online apps to do some of your work. Some cyber policies will say your computer system is all of your computer equipment and all of the computer equipment managed on your behalf by a third party. In that case, it's all covered the same, and it's not, you don't need to worry about it. Other cyber policies will define the 2 separately. They'll say your computer system is your computer system on site at your premises. And then we have outsourced service provider systems, which are separate systems which are managed on your behalf by a third party. If those are separated out, you may then have separate business interruption limits for own business interruption and outsourced service provider interruption. You might have different indemnity periods for each, and the outsourced service provider cover might be an optional extension. It might not be automatically offered with the cover. Again, if you outsource most of your systems, if most of your data is in the cloud, and you're buying a 5 million limit cyber policy with a $250,000 limit outsourced service provider sublimit, you're wasting your time buying the 5 million limit if everything is with the outsourced service provider. So that's key to understand. Next up, there was another one on this slide, which is no longer there. Never mind. So next up, talk about some onerous conditions. This is just something to avoid in policies. So when I say onerous conditions, and we don't see a lot of this anymore, but there are still a few cyber insurers who are doing it, I'm talking about a condition that says you must back up your system daily. as a condition precedent to liability, you must back up the system data. As a condition precedent to liability, you must install all critical security patches within 72 hours. Now, the trouble with these, you might have a policy to do those things, and you'll be asked before you place cover if you do those things. That's absolutely fine. But if it's actually a condition which stops the policy from operating, then as soon as your IT guy goes ill and the other person who knows how to do the backups, actually they're not in for whatever reason, and you miss one backup, you have no cover. We, as I say, it's quite rare these days to see these. If we can possibly avoid it, we don't place cyber policies with those kinds of conditions, but just something to be really aware of if they do exist. Something it's not on the slide, but I just wanted to pick up on as well is system failure cover, just back on the business interruption. So usually a cyber policy will cover you, as I said, for a malicious actor, for a hack or a virus. Now, system failure cover is an extension to cyber business interruption that you can get, and this will cover you for any system outage, regardless of cause. We don't need to prove a hack or a virus, it's just the system goes down, as we saw with the CrowdStrike outage, which you may have seen a few weeks ago, which took down lots of airports and lots of big businesses. That was a security patch which just didn't do quite what it should, and it brought down businesses. That is not a core cyber business interruption because there's no hack, but if you had purchased system failure cover, it would be covered under that area. And going back to outsourced service providers, you might find a policy that has cyber business interruption, then outsourced service provider interruption, then system failure business interruption, and outsourced service provider system failure business interruption. So it can get a little bit complicated to understand how they interact, and you might only buy some and not all. That's just something to look at. War exclusions. This is, I won't go into this in too much detail because it's a bit insurance nerdy. It interests me, but it probably won't interest most of the people on the call. But as with most insurance, war is a general exclusion in insurance because it's just too big a thing for the insurance industry to cover. It should be picked up by governments. Having said that, many cyber policies now will cover offer bystander cover. So if, for example, Russia launches a cyber attack against Ukraine and the virus they put out spreads around the world, as I think the NotPetya virus was an example of this, and impacts you in the UK, because you're not in the state that's being targeted, that would generally be covered under a cyber policy. If you had a server in Ukraine, because that's the state that's being targeted, that would generally fall under a war exclusion. Finally, crime limitations I will come on to when we talk about crime cover in a moment. And there we go. So crime insurance is a separate line of insurance, totally separate to cyber. But the reason I mention it is I think a lot of people buy cyber insurance expecting they're going to get crime insurance. So a crime policy covers you for theft of money, securities or property, including theft through fraud or deception, including social engineering, and including theft by employees. So to go back through those, theft of money, securities or property. Now, most cyber policies will only cover theft of money. They won't generally cover theft of physical property. It's not really what they're about. Most property policies obviously do cover theft of property, but they limit theft to theft which involves forcible or violent entry to or exit from the premises. So they wouldn't cover theft by fraud or deception, they wouldn't cover theft by someone just wandering in, and they wouldn't cover theft by employees. Similarly, some cyber policies would exclude claims by employees because both for the property insurer and the cyber insurer, the people that are the highest risk are your employees because they have the most access to your premises. So just to bear in mind, if you want to cover theft, then really that is a crime policy instead of or in addition to a cyber policy, and particularly if you want higher limits than the kind of low 100,000, 250,000 extensions you can get under a cyber policy, a crime policy would be better where you can buy the higher limit as you deem necessary. So moving on just to talk about risk management, and probably the key question for me of this session, should you spend your money on cyber insurance or cyber security? And that's a bit of a chicken and egg question for me, really. So risk management and security go hand in hand, and that's not just a cyber thing. I've never heard anyone say, you know what, I've put really good alarms on my offices so I'm not going to bother insuring them. I won't insure for fire, I won't insure for theft, because I've got a fire alarm and intruder alarm, and that will sort it out. Similarly, I've never heard anyone say, well, I've just renewed my home insurance, so I won't put a lock on my front door. It's insured, so why would I bother locking it? And incidentally, if you try to buy home insurance without a lock on your front door, you might find that quite challenging. Insurers will generally expect you to take some kind of precautions. It's exactly the same with cyber. So there are some basic things that cyber insurers may need you to have. I'll talk about that in a minute, and that will depend on your business. But I would say start with the basics. Any cyber security that you can put in place quickly, cheaply, and easily, do it. Get it there and get it done quickly. And then I would engage insurers quite early, because when you're talking to insurers, if your broker goes out to 10 insurers and 8 of them come back and say, we're not offering insurance because you don't have multi-factor authentication, you might decide, I'm going to move MFA up the list of things that to put in place quite quickly, because I can see it's causing a problem for my insurance. So engage your insurers early, and probably before you deal with security that's going to take months or years to implement is a good way to go. So talking about those key security requirements, then, I say it will vary. It varies from insurer to insurer. Different insurers want different things. It will also vary based on the nature of your business. Generally, insurers expect more security from larger businesses than smaller businesses. They expect larger businesses to be more sophisticated about this. They will also look at the nature of your business. So if you have loads of very sensitive healthcare data, you are a very different risk to an insurer to an online retailer that maybe doesn't have very sensitive data but has a very immediate business interruption need if their systems get down. Having said all that, the basics that most insurers require fall into 3 categories. The first one is access. How do you access your systems? Can you access your systems remotely? Do you require multi-factor authentication to access them remotely? A text or a key code generator or something in addition to a password. Insurers might also ask about admin access, because your system administrators have the most access, they have the most potential to cause damage to your systems. So is it harder to log in as an admin than it is to log in as a regular user? The second thing is backups. Do you have backups? How regularly do you have backups? Are they tested? A colleague of mine, their client had a cyber attack. They took backups every day. Every day they had a USB stick, which they swapped over and took home every day with a backup on it. And then they had a ransomware attack, and they plugged in their backup to restore and discovered it hadn't been updating in 18 months. They'd relied on the fact that there was no error message saying it wasn't updating, and assumed it had been updating, but they hadn't actually tested the backup. So quite often insurers will say, if your backup's not tested, we'll assume you don't have one, because you don't really know if you do. Insurers might also ask, are your backups on site or off site? Are they connected to the live environment, or are they offline? Really just wanting to know if your systems are encrypted, how easy is it for the backups to also be encrypted or compromised? And the third key thing is patching. So how regularly do we apply patches? And particularly critical, safety critical patches. So they're not really worried about feature updates, but if something resolves a critical vulnerability, how quickly is that patch implemented? Insurers might ask about this. They might just discover it on a scan, because insurers, as part of their underwriting, will do a scan of your internet-facing architecture, and they will look for a range of things, but including unpatched software that they can exploit. Because that is one of the things that hackers do, is they go, I know a vulnerability I can exploit, let's scan the internet for that vulnerability facing the internet. So insurers do the same thing to look at your exposures. Once we move beyond that, I know Harrison's going to talk a little bit later about MDR, and services like MDR and other more advanced security services are going to help with firstly, how many insurers get back to you with quotations. That then, the more insurers quoting allows your broker to create some competition to get better coverage and better premiums. So really, the more security you can have in place, the better. And of course, ideally, you don't want to have a cyber claim. You're transferring your risk, you're securing as much risk as you can, and then transferring the residual risk to an insurer. The less risk you have to transfer, and the more you can just stop yourself from having an event in the first place. Obviously, that's great. And just now to look at the risk management services or the risk management considerations as part of the cyber placement journey. So first up, when you're placing cyber insurance, unless you're a very small company, you'll probably be asked to fill out some kind of proposal form. That could be anything from a one-page declaration to, if you're a large company, 20 pages asking you every security question under the sun. Those can be quite useful to show to your security providers and say, well, here's all the things we could have. Which of these boxes do we tick off? It won't give you a ranking of how important they are, so sometimes it's worth going to insurers and seeing what they come back with and say, we'd like you to have this in place. But it's just a good tick list to get you started. Another thing, I mentioned that insurers will scan your internet-facing architecture for unpatched software. They're also scanning for things like open ports. And they will also do things like deep web monitoring to have a look at how many password breaches they could buy off the dark web in order to get a hack into your systems that way. Some insurers will then provide you with that scan free of charge, and even if you don't place cover with them, which is a great service. It's obviously great marketing for them, because as a broker, I'm always going to go to one of those insurers to get that report to give to you as a client, regardless of whether they're going to place the cover or not, because it's just a nice little added benefit which might pick up something that's not been picked up elsewhere. Once cover is then placed, most insurers will do some kind of ongoing monitoring for their clients. Now, this varies widely in sophistication. Some insurers are engaging a third party just to do once a month scans, or just scans for things they think are really important. Other insurers have got big in-house security teams that are doing constant scanning. They've also got their own honeypot servers looking at what vulnerabilities are being exploited, and they're matching those together and letting you know if you've got a vulnerability they're actually seeing exploited in the wild. This obviously isn't a replacement for your own cybersecurity, but it's worth understanding what your insurer has, particularly if they're offering a service which you can't afford or can't logistically implement right away, to see if you can get that as part of the cyber policy. And then the last bit is risk management bursaries. So some insurers will offer, they will say, as part of placing the policy, you get X number of credits with our risk management partners to do some risk management, to do some training or awareness, things like that. Other insurers will just say, and particularly for larger premiums, we'll give you back 10% of the premium, 5% of the premium to spend on risk management. Just let us know what you want to spend it on, we'll sign it off. And if you're a larger business already and paying a lot for your cyber already, you're probably doing a lot of cyber risk management with third parties every year. So if you can get the insurer to pay for it, so much the better. And that's a conversation and could be part of a negotiation to have when placing cyber cover in the first place. Just before I pass you over to Harrison for his bit, I want to talk to you a little bit about Sutton Winston, the sales pitch at the end, of course. So we are a chartered insurance broker, which means we have to have certain standards of professionalism which not all insurance brokers have to sign up to. We have certain levels of training and certain things we have to do. We're also an Investors in Customers Gold company, which is reviewed through reviews of our internal processes and surveys of our clients to hit that benchmark through a third-party accreditor. So we work hard to try and show our professionalism and do the best we can do. We've got here our values: service, independence, integrity, people, and joined-up thinking. Of those, I particularly wanted to touch on independence. So we are an independent insurance broker in the sense that we are not tied to any insurer. We can access the full market, but we are also a subsidiary of a company called Acrisure in the USA, who are the 6th largest insurance broker in the world. So Sutton Winston's about 150 employees in the UK, but we also have access to the Acrisure global network and the backing of the larger group when we need it for a client. And we place all kinds of commercial and personal insurances. We place employee benefits packages. We offer healthcare cover, both for private individuals and private medical for companies, or key person insurance. We've got various niches in media entertainment schemes, we've got bowls and racket schemes, cricket club schemes. Basically, to not go through this slide in minute detail, if it's insurance related, we probably have a hand in it. It's probably something we can assist with. So please do ask. And with that, I believe I'm going to hand over to Harrison to talk to you a bit about MDR.
Perfect, thank you, Nick. So yes, yeah, my name's Harrison, and as you can see here, I'm going to do a brief explanation of MDR services and why they might be good for you. Now, to put this into a bit of context, I want to take you back to the example Nick gave earlier, where he said he invited you to picture the scene where it was a Friday night and you've had a pop-up on one of your machines saying you've been locked out and you need to pay. Now, what we know about the current landscape is there are plenty of indicators that security experts should be able to pick up on before that scenario where you've been locked out. There would have been someone logging into the system. There would have been someone poking about, doing reconnaissance, extracting data. Now, that is what MDR is trying to achieve. Effectively, MDR stands for Managed Detection and Response, and a nice little high-level overview, it's a 24/7 human-led monitoring of your network to try and thwart human-led attacks. Now, I appreciate this is a bit of an eye test here, but I'm going to give you the summaries of this. So this was a real-life customer that came to us. They had reason to believe their networks had been hacked. They were a medium-sized theatre based in the UK that employ around 100 staff members. As I said, in 2024, they were seeing evidence to suggest they had been hacked and they had an active adversary living in their network. Now, I feel like a lot of businesses wouldn't necessarily know what to do when presented with that information. So although their current security technology was blocking the tools that this adversary was trying to use, it of course highlighted the need to them that they needed more advanced security and visibility of what was going on in their environment. So here at ESET, we delivered a demo to the customer. We explained to them what MDR is. They did a successful POC and a trial. Now, a month into their MDR contract, yes, we did detect on some activity. Not only did we detect and block that activity, but we also produced the customer this very nice report about what we discovered. Now, again, I appreciate this is an eye test, so let me give you the highlights of this. So if we workshop it, without ESET Protect MDR, what would have happened was the adversary would have tried to deploy their malware, the solution would have detected the malware and removed the malware. And if anything, any of you know a little bit about the landscape and ethical hacking, you will know if you're in the network and the solution detects your malware, all you're going to do is you're going to try and find another method. You're going to boot up your Colbert Strike or your Meterpreter sessions or Metasploit and try and find a way of getting around the current solution. So malware detected, malware removed is no longer good enough, unfortunately. So if we look at this with MDR, this is what we are able to detect about this attack. So yes, malware detected, malware removed, but we also isolated the machine from the network, so the adversary no longer had permissions to keep trying new things. We were also able to tell the customer that we noticed the hacker access some sensitive files. So in this case, there was a file called company name passwords.doc. So picture the scene, you're an IT person or you're in charge of the network. What are you going to tell that person? Well, me personally, I'm going to tell that person, why on earth do you have a file called passwords.doc? Let's pull them in for some cybersecurity training. Let's give them access to a password manager so they can manage their passwords correctly. And of course, you need to get them to review all the passwords in that document. That's information you weren't privy to in that first section. We were also able to identify what user account was being used. So in this case, it was, let's say, Julie from HR. Let's assume Julie isn't the mastermind behind this attack, and let's just assume her username and password has leaked. Actionable information. Let's go and reset this password. Let's check it's not logged in on any other servers, any other machines. Again, information you weren't privy to prior to having MDR. We also noticed the attacker tried to create 3 new user accounts. Again, actionable information. Let's go and delete these user accounts. Check they're not logged in on any other servers. We found more compromised machines, so depending on your internal processes, you might want to scan those machines, or I know in the education sector, if they're suspicious of anything on machines, they'll just flatten the machines, re-image them. Again, you're now privy to that information. We also identified what vulnerability was being used by the attacker to elevate their privileges, if I remember rightly. So again, the business can sit down. Why do we have Veeam? Do we need Veeam in our environment? Yes, we do. This is what we use to back up our software. Okay, why do we have a version from 2023 that has this vulnerability? Let's get this updated. We also gave them a list of malicious IPs that the attacker was using to create their reverse shell. So again, jump to your perimeter firewall, put that information in your perimeter firewall, and further make it more difficult for that attacker to do what they were doing. So all of this information you weren't privy to. And like I say, we isolated the machine from the network. We closed the reverse shell that the attacker was using. We blocked all the leveraged executables, so not just malicious executables, but we blocked the executables that we could see the attacker was trying to use, and we identified a load of enumeration methods that they were using. So I think that really sums up the value in MDR versus no MDR, and I think it's clear to me this is why the likes of cyber insurance companies are insisting on services like this, because the information you can glean from one source is just incredible. So a little bit about ESET. We have been in the market for 30 years. Now, if you think about the definition of MDR, managing detections and responding to them, ESET have been doing this for more than 30 years. Not many companies can say that. You know, we've been in this industry for a very, very long time. We are a private company with no debt. We're always focusing on the technology. You know, we're not looking to maximize profits, and we're not beholden to shareholders. And, you know, those are good business models. I'm not denying that. But here at ESET, we are focusing on the technology. We're one of the biggest European vendors. A funny story I heard actually was, in some parts of Europe, rather than saying antivirus, they say the word ESET. Like ESET is a synonym for antivirus, which I think just shows how widespread what we do is in certain parts of Europe. We are owned by the original founders. The guys that founded the company still have a really active approach in managing the company. And of course, we adhere to our very strong values. And if you want to get an idea of that, you just need to take a look at what we've been doing in Ukraine. Now, to get an idea of the impact our threat intelligence is having in the industry, I would strongly, strongly recommend taking a look at our page, welivesecurity.com, and you'll see all of the research we've been doing in the industry for many, many years. As a matter of fact, I read a really cool article this week about the Golden Jackal APT group, who have found I think Tony did a video on this as well, actually, if I remember rightly. Yes, he's nodding, excellent. They found a pretty cool, I mean, I shouldn't ever describe cyber criminals as pretty cool, but the techniques seem pretty cool of how they managed to get an infected USB from an online network into an offline network and extract data from the offline network and get it sent back to them. It was quite incredible, definitely worth a read. But yes, We Live Security, a good place to be. But I think with that, I would like to invite any questions.
Well, so we do have some questions, but firstly, Harrison, I've now met the person who watches the video. Thank you for that.
Oh, it's just the one viewer, is it?
I thought, yeah, I know I had one viewer and I didn't realize it was you. And,
I've got you in my RSS feed. As soon as you release one, I'm there on it.
Yeah, and I've just renamed my password .doc to logininformation.doc, just to be more secure.
Perfect.
Yeah.
Perfect.
Nick's thinking, do we insure them? Right.
Yes.
Yeah. We do have a question, actually, and I think this is targeted at Nick. This is definitely for you. How much time should a small company set aside to go through the entire process of actually becoming insured? So when should somebody start that whole process with a potential goal of an insurance date?
I mean, it depends what kind of security you've got in place already. It can be, if you've got those kind of, if you are a small company, particularly if you're a micro enterprise, and you've got the basics in terms of access, patching, backups in place, then it can be something you can turn around in a week. I mean, realistically, probably if you give yourself 6 weeks to get through things, that would be fine. Obviously, if you're a larger company and you need to put lots of security in place, that's when things can take longer, to the point where, particularly like large charities and things like that, we've seen clients where we've said, you know what, don't spend your money on insurance this year because you just need to sort out your security, spend all of that money on security and come back next year, at the extreme end. Obviously, hopefully there's not too much of that, but at the extreme end of really needing to sort your systems out, that's where it might be.
Okay, and your example, by the way, during your presentation of, you wouldn't leave your door unlocked. Yeah, I do actually, I have met somebody recently that took the attitude of, we haven't switched on MFA because we're insured. So unfortunately, there are people out there, which is very concerning. The person had I will say the person had a stern talking to. Yeah.
I hope it wasn't one of my clients.
I hope so too. There's a couple of other questions on insurance, but let's, Harrison, you've used some acronyms in here, MDR, yep. EDR. Maybe somebody's asking the question of XDR.
Yep.
So maybe you want to just explain the difference between some of the acronyms that are out there.
Yeah, so it's a bit strange, and the definitions have changed over time. But EDR stands for Endpoint Detection and Response. So I think I am interpreting that as your endpoint detects it, your endpoint responds to it. You could also argue that you can bring some human expertise into that as well. Now, XDR steps into the realms of extending those detection capabilities. So seeing more about what did or didn't happen in the build up to that endpoint detection. So, a lot of people are ingesting things from different points or seeing more about what's going on in the machine in their XDR solutions. An excellent example might be network connections or registry key modifications. You wouldn't typically see that in a detection, but that can be critical information in building a big picture. Now, MDR simply is the idea of bringing human expertise to help you manage what will inevitably be an explosion of information. If you think about all of this information that XDR platforms are gathering, it's really difficult for a small team, even a large team, to manage in some cases, because you've got to stay on top of the expertise. It's got to be 24/7 monitoring to get the maximum use out of it. So that is where MDR tends to come to the table.
So thank you for that, Harrison. That's I'm sure we should come up with some more acronyms just to confuse people even more.
I'm sure we could. Yeah.
So there's a couple of insurance questions here, Nick. How does a normal business cyber insurance differ from managed service providers' cyber insurance?
So with a managed service provider, it's a slightly different question, because you have, as a managed service provider, your professional indemnity insurance, so covering claims against you for the way you provide your service or your failure to provide a service. And we would usually put that back to back with cyber insurance, because there is this grey area where if your systems go down, that's a cyber event. But if you're then failing to provide a service, that's also a professional indemnity claim. And you've obviously got the cyber risks are that much higher, because you're not just affecting yourself, you're affecting all your customers as well. It's a slightly different proposition once you start looking at MSP's cyber insurance, and where possible, we'd recommend it be placed back to back with the professional indemnity cover.
Great, thank you. And the other one was, somebody's asking how much, how do you determine how much cover you need? That's a great question. I always struggle that with my home contents policy each year.
It's a tricky question. So some bits are relatively straightforward. So business interruption, if you know what your turnover is and you know how long you could possibly be out for, then you know how much money you could possibly lose. So the business interruption element of your limit is relatively straightforward. I think the difficulty comes if we imagine that ransomware attack. So we've got ransom negotiation, we've got to reinstate systems, we've got the business interruption cost for the time you're out. The ransomware provider, the ransomware criminal has inevitably also stolen a lot of data whilst they're in your systems, and they're also extorting you with that. So you've got a data breach and you have to notify that to the ICO, and you might have claims brought against you by customers. So when you look at that worst case scenario of everything together, obviously these things can add up to quite a large amount. It is a tricky one. I think I would start with your business interruption number because that's an easy number to obtain. I would also get the range of limits and look at the costs. I mean, realistically, the difference in cost between a 2 million limit and a 5 million limit might not be that much, in which case I'd err on the side of caution. Depending on the size of your business, you might say, well, actually 5 million is not enough. We do that in lost turnover quite quickly, and we need our lost turnover plus other costs.
Well, there's the other important angle there, isn't there, of not being over-insured either, because you don't want to be paying a huge premium for over-insurance, which isn't going to pay out that way. So I think it's
yeah, it's got to be. You could buy as much insurance as you want. You could buy, hundreds of millions of limit eventually if you really went to enough insurers, but it just wouldn't be economic to do so. So yeah, you have to take that view of what is economic for me to insure and what risk am I comfortable with.
Yeah. There's one last question here, which I think I'll just easily answer, which is somebody's asked the question of, do we have average costs for the incident responses and the different elements to a claim, etc. If you want that information, actually I'd go and read the coalition report, because the coalition report breaks it down by certain sectors, and it's well worth reading. If you can't find it online, please reach out to me, Nick, or Harrison, and ask one of us, and we'll send it to you. I've put the contact details here on the question screen, because if you want to reach out to any of us individually, please feel free. Or if there's any general questions, you can email me and we'll do our best to answer them. So Harrison, Nick, I'd like to thank you, because we are at the top of the hour, which is great. And I'd like to thank you for your time today. Any last comments, Nick?
No, just to say, as a call to action, if you don't already buy cyber insurance, consider it. Feel free to talk to me, but talk to your broker. But definitely, it should be part of your overall cyber risk management strategy.
And Harrison, any last thought here?
I guess with a call to action, let's try and get out of this sort of legacy-minded security approach and try and improve our securities generally in businesses.
Well, and from my side, I would just add, a couple of years ago, I think cyber insurance was certainly on one side of the fence, and cyber security was somewhat on the other side of the fence. We are both on the fence. I think we are joined together for the foreseeable future. So I think this is a common theme, and the two industries are definitely coming together. So with that, thank you for attending this webinar. Please look out for future ESET webinars, and thank you, and have a good rest of your day.
Thank you all. Thank you.